Alrighty, folks. So, inflation data is in, and for all the tariff criticism out there, the numbers were pretty solid across the board with no major surprises. Markets responded positively, pushing to fresh highs and extending gains across all indices. Sentiment for a September rate cut remains strong, so it'll be interesting to see how that gets priced in over the next couple of months. And as you can see here from the heat map, pretty solid performance all around. That's certainly one of the more green heat maps that we've seen in recent weeks. Now, jumping on to oil. Oil yesterday, the oil bulls were unable to hold the key 63.80. We pretty much just ranged out for the first part of the day and then sold off throughout the rest, coming down to 63.19 and closing the day off there just above 63. I think that was actually no, just under 63. Sorry, it was 62.99 that we closed the day off at. So if the bulls want to regain the momentum within oil, they have to retake 63.47 as the immediate local regain overnight. Now, one big obstacle is going to be the weekly open. That very much will play quite a key part here with price. So if price fails the weekly open, I would expect us to start driving down towards what is the 0.75 of the range at 62.44 with a possible stop off there at 62.62. And then moving on to gold. So here we can see gold had a fairly flat day yesterday. There was no real movement. Yes, there was a little bit of a sell-off and additional volatility around the time that inflation data came out. However, as you can see there was no real major change. We closed the day off pretty much exactly where we started. So for today, we have opened up above the daily pivot there at 33.46. That would be the key level that you wouldn't want to see any closure below, and start working our way through the supply zones above here. So if we can push up into 33.61, it'll be a pretty decent break of structure there. And yeah, when you look at the higher time frame on gold, there's definitely a bit of a price squeeze happening at the moment. So I don't believe we're going to be range bound too long for gold, so definitely keep your alert set and watch out for what's going to happen in the coming weeks. And sector wise, the strongest performer of the day was certainly communications, coming in with a 1.9% gain on the day. All sectors closing with positive returns, with what looks like the consumer staples coming in with the smallest gain of the day. Actually, no, wait, I stand corrected. It was the real estate sector coming in with the smallest gain on the day, but across the board, pretty positive. Like we said, it was a positive, very green heat map there that we were seeing at the very start. And yeah, this just really confirms everything. And as you can see, really, the Mag 7 had a fairly positive day as well there. Even Tesla, who were down for most of the day, managed to claw back and close the day off with a 0.53% gain on us. So looks like that very well could be the back test of the potential breakout. However, I would still like to see the price come down into the 328, 327 region for a full confirmation of that high time frame breakout. Jumping on to the S&P 500. So as we were expecting in yesterday's update, just a bit of additional volatility there during the actual inflation data release and in the build up, just to really kind of move around, quite up and down of the targets, never really breaking away in either direction until time came to actually break out. And thankfully enough, it was to the top side. So you can see there a full sweep all the way up into the R3. So for today, 64.20 is going to be the level that you want to see price hold above. Any retracement down to here overnight would be perfectly healthy, as long as that momentum doesn't drive us down through 64.20 and we can actually hold that and start pushing for further highs, especially on the S&P 500. It's just the way everything's shaping up at the moment. We probably have another few months left before we do potentially get rate cuts, and the dynamic of the market could significantly shift during that time. And the Nasdaq, so we can see here for the Nasdaq, fairly similar story as to the S&P 500. Overnight, we pretty much range bound, nothing massive either direction. And then once the inflation data came out, we had the additional volatility and then continued to the upside there. So just front running the R3 at 23,867 yesterday. But yeah, pretty significant moves after a full breakout and back test of the daily pivot. For today, it's going to be 23,731 as the level that you want to hold above. So pretty much identical price action there to the S&P 500. Anything can come down here overnight as long as momentum doesn't drive you down through. You can at least keep it before going for the top side. And lastly, the Dow Jones. So the Dow Jones yesterday actually gained something massive. You can see there we broke through the monthly pivot and back tested it and regained very solid buyback there on the 15-minute off the monthly pivot. So ideally, if price does come down here tomorrow, we don't flush the monthly. We could wick it into the daily pivot, but ideally price will remain up here, and that's where we're now going to start seeing the Dow Jones push for all-time highs. So really, really interesting here. Of course, the supply zone here is going to be a big point of contention for price, but if we can get an aggressive move up into it, then yeah, I would be expecting us to work on this supply block here at, what's that called, 44,700, give or take a couple of $100 either side. As you can see, there is a lot of supply stacked there, so that's what we're looking out for this week, folks. Anyway, it's been pretty positive across all markets, and yeah, hope everyone has a good rest of their week.